PM Tun Dr. Mahathir Mohamad will unveil the economic stimulus package to address the COVID-19 outbreak on February 27th, announced Finance Minister Lim Guan Eng. In a statement, Lim said that cash flow is a principal concern for parties that have been economically affected by the outbreak. Lim says that while the government will help assist these companies, emphasis should be placed on exploring alternative revenues, such as encouraging domestic tourism and sourcing from other markets. It also involves keeping the domestic labour market resilient while ensuring that soft and physical infrastructure remains in place amid the short-term weakened demand. Lim explains that the ultimate aim of the package is to ensure the economy emerges as whole as possible and benefit from the expected economic rebound post-COVID-19. The Finance Minister adds that the stimulus package is neither a new budget nor a part of Budget 2020. Lim further called on industry players to assist clients and suppliers so that industries can benefit from the economic rebound. Carlsberg Brewery Malaysia says that Customs has cancelled its bill of demand, claiming sales tax and penalties totaling 20.65 million from the company. In a boss announcement, the brewer said that the cancellation of the amount had been confirmed in a letter from the Royal Malaysian Customs. The cancellation took effect on January 15th. To recap, in September 2014, Carlsberg had been slapped with an excise duty, sales tax and penalty claims totaling 56.4 million ringgit. It was another strong day for the group on the stock market as the counter closed 0.95% or 34 cent up at 36 ringgit, which puts its market cap at just over 11 billion ringgit. Carlsberg stock was still riding the momentum from yesterday after MSCI said that it would be added to the MSCI Global Standard Index. FGV Holdings is diversifying into dairy farming and fresh milk processing as part of its plan to transform into an integrated agri-food company. FGV is investing 10 million for a 60% stake in Red Agri Farm, which owns the Bright Cow brand of dairy products. In a statement, the company said this move will enable it to create more value from its existing resources and to tap into synergies within the palm-based circular economy. CEO Datuk Haris Fadzila Hassan says that dairy farming has been identified as one of the pillars of its integrated farming business. Other key components include animal nutrition, paddy and cash crops like MD2 pineapples and Cavendish bananas. Red Agri currently processes 4,000 litres of fresh milk a day, which will be increased to 20,000 litres a day by 2022. FGV also gave an update on its palm-based animal feed business, where sales have increased 113% following a ramp-up in production. Fadzila says that over the next 5 years, FGV was looking at additional revenues of about 120 million from this business. HalfinOne Capital believes the government will likely accelerate the implementation of construction projects in the second half of 2020 to bolster economic growth in view of external headwinds. In a note today, the research house said that the government's COVID-19 prompted economic stimulus package will likely focus on helping SMEs, manufacturing and tourism. HalfinOne Capital says, nevertheless, the increase in development expenditure allocation by 4% year-on-year to 56 billion in Budget 2020 and the revival of large-scale infrastructure projects would prove enough of a stimulus. The research house noted that the government had gone for a similar tactic in 2001, 3, 8 and 9 to mitigate downturns. According to Bernama, the research house cited in May 2003, the government had announced a 7.3 billion ringgit economic stimulus to mitigate the impact from SARS, with a focus on private consumption, SMEs and tourism. Among the large-scale infrastructure projects to be revived include the Pan-Borneo Highway, MRT3 and KL Singapore HSR, among others. CIMB Securities has lowered its EPS forecast for Maybank by some 3.5% for FY20 and FY21 to factor in 2 OPR cuts of 25 basis points each in the first half of 2020. Analyst Minister Eng wrote in a note today that the 2 OPR cuts by Bank Negara include the reduction last month. Following the EPS forecast cut, CIMB's target price for Maybank shares is reduced from RM8.83 to RM8.54. The research outfit also retained its whole call on the bank given its concern about the potential hike in gross impaired loan and negative impact from the OPR cuts. But on the plus side, CIMB feels Maybank's share price will still be supported by its attractive expected dividend yield of 6%. Eng says the research house is sticking to its view that the Jan OPR cut will lower Maybank's FY20 net profit by about 2%. CIMB is also expecting another 25 basis point OPR cut for 2020, which it says will have a similar 2% impact on net profit.